We're on Professor Dave.
All right. So I stayed up late last night to watch the outcome. Although when I went to bed, the outcome hadn't been decided, and I didn't even know what I was going to talk about this morning for sure. So when I woke up, I checked my phone and said, okay, well, I know what I'm going to talk about. So one of the things, you know, what I've talked about is in financial planning, and is the fact I've been doing this for over 25 years. And one of the things that means is I've seen it all and I've learned, don't overreact to events. And one of the most important things about financial planning is focusing on change and also adapting to the environment we're in. I'll tell you a quick little story, which is today I have my Miata, and I was having a problem with the window switch. So I was trying to be cheap, and it was the button that broke, so I was trying to find one at a junkyard, right? Instead of buying the switch. So I went to this local junkyard near my house to try to see if they had something. They didn't, but I was talking to the owner briefly, and he was saying if so-and-so wins, we're effed, okay? So I basically said to him, because it's in my community, I didn't want to get political with them. I said, listen, you know, no matter who wins, we're not. Because one of the things that we do as financial planners is to look at the environment that we're in and to adapt accordingly. So I had said to him, I said, no matter which candidate wins, we will adjust our strategies accordingly. And I think that's an important thing to be mindful of when we're thinking about the aftermath of what's going on. And we all have our opinions on this, and I'm not going to get into that. Yes?
Do you move assets around depending on where you feel the economy is?
Well, that's one of the things I'll kind of touch on. And that's actually a good point, which is that, just to answer that question briefly, which is that different candidates are going to have different priorities as far as industries that they're going to favor versus industries that may not be favored, as well as tax policies and so on. That's one of the things I want to touch on a little bit based on some of the proposals that have been out there, which is that there are opportunities potentially, regardless of who ultimately ends up in, and now that we know, changes can be made accordingly. So, for example, one of the emphasis of Trump's platform is energy, right? And particularly as opposed to the current administration, where it was more of an emphasis on green energy. Sorry, Tim, but there will be probably less of an emphasis on those industries as we get back more to some of the traditional fossil fuel industries, right? And potentially, I think there'll be some perks for nuclear as well. But I think the oil and gas industry, especially, there'll be additional incentives to increase domestic production. So certainly those industries may have some favor, but I'll get to that more specifically in a few minutes. But so my point is that when you're looking at the big picture, you try to adapt. So for example, when they passed the Tax Cut and Jobs Act in 2017, you know, there was some concerns about, for certain individuals, their taxes may go up. And although it was promoted as a very broad-based tax cut, ultimately the majority of the cuts went in two areas. And it tends to happen with all tax cuts, unfortunately, which is that the very low tended to get benefit from that, and the very high tend to get benefit from that, and people in the middle often ended up about the same. And at the end of the day, it's sort of where I ended up, right? Which is that, but what I found was, for example, initially our taxes actually went up because one of the things that they did with the Tax Cut and Jobs Act was elimination of the full deduction for state and local tax. You heard me talk about this previously, as well as expanding the standard deduction and removing the personal exemptions. So individuals who itemized a lot and also may have had a number of dependents, they actually may have been worse off. But one of the things that they did in that act was to add the qualified business interest credit, which helped a lot of individuals who are self-employed or small business owners and so on. So for example, using myself as example, we lost the ability to itemize and the personal exemptions, but the qualified business interest deduction, at the end of the day, our taxes were essentially the same. So what's my point in this? My point is that, yes,
One question. When they changed the tax, didn't they just change the withholding for the tax and ultimately you had to pay it anyway?
I'm not sure what you mean by change withholding.
Like, they were taking X percentage of your paycheck out for tax.
Okay.
And they changed it and lowered that percentage, but still made you liable for the same amount. They just didn't take that much out of your paycheck.
Well, what is taken out or not taken out is almost a function of your decision, whether you're self-employed or W-2. If you're self-employed, you basically decide your withholding by your quarterly payments. If you're W-2, you can change that any time by filling out what's known as W-4 form.
If you didn't change anything.
Yeah.
It changed
So
anything.
that has nothing to do with what you actually pay, and that's one of the things I sometimes will explain to people. I'll meet people and say, "Oh, how are you doing on taxes?" "I'm doing great. I got $5,000 back last year." So I would say to them, "Well, you also, your tax liability was $20,000. So would you rather pay $20,000 and get $5,000 back at the end of the day, or would you rather pay $17,000 and owe $2,000?" Right? I'd rather pay $17,000 and owe $2,000. Whether you get money back or pay is really more of a function of what you have taken out of your check than what you ultimately owe. What that tax law did, though, is, which is why, to your point regarding the having less taken out of your pay, is that the marginal tax brackets and rates were lower, right? So for example, they expanded the 0% bracket, they expanded the 12% bracket. Okay, it used to be a lot of the lower taxpayers were in the 15% bracket. So they also lowered the higher end bracket, where it used to be 39.6%, where the highest now is 37%. So those taxes were lower. Now, having said that, if you lost certain deductions and so on, that doesn't mean you're going to necessarily pay a lot less.
I guess the scenario I'm mentioning is just someone said, I didn't do anything, this bill passed, I made more than my paycheck, at the end of the year I owed $3,000 more than I thought I would, I wasn't prepared for that.
Yeah, because what's going to happen is, based on the lower brackets, they're going to take less out, but that doesn't mean you're going to pay less because of the rules in that. And that's part of my point, that the rules affect people differently. Because as I said, even though they lowered the rates, because we lost, using myself as an example, a lot of those deductions, the state and local tax and some of the other things, overall, our tax liability didn't really change, even though the rates were lower. And had they not had the qualified business deduction, our tax actually probably would have been higher. Okay, so, and that brings a good segue, which, given now we know the outcome of the election, one of the big things that was in play, and I think I mentioned this the last time I spoke, was the status of this law. Okay, the status of this law, in particular, was scheduled to expire in 2026. It had what's known as a sunset provision. And for those who aren't familiar with that, what they do is that in order to pass legislation, you need the 60-vote majority in the Senate. There is a workaround in that. It's called budget reconciliation. They can do that for legislation that may involve financial aspects, and obviously tax laws do. When that's the case, that can be passed with 51 votes in the Senate. And that's how many of the tax law changes have been passed in the past few years. However, in order to do that, they have to have a 10-year window where it quote unquote sunsets, so they can pass that legislation. Okay, it's sort of a nuanced workaround. I don't know why they have that, but it doesn't really matter. So the point was that legislation was scheduled to expire. So had the Harris administration taken power, the expectation was that most likely it was going to expire, or at a minimum, they were going to have to pass a compromise that would be more favorable to their objectives, right? And that's sort of what happened with the Bush tax cuts when they expired, and then we had the Obama administration where they sort of had a compromise regarding keeping those tax brackets in place, but agreeing to some other provisions. So with the outcome decided, and we know that the Trump administration will be returning to power, what does that mean? Well, it means, for example, for the Tax Cut and Jobs Act, that will likely be continued, okay? So will it be continued in its current form? Not necessarily, but it will be continued by and large. In part, they did have the Senate, the House has not been determined. My expectations is that it almost doesn't matter, it's probably gonna be razor thin one way or the other, so either way, there's gonna be maneuvering that will need to be done. And I think one of the big things that has been discussed in order to extend this legislation will be, there's been a lot of talk about SALT, right? Which is the state and local tax deduction, and restoring some of that. Trump has indicated a willingness to consider that, especially since he has a lot of allies in states that have high tax, and he's making friends with Silicon Valley and California. Obviously, property taxes and state income taxes is a significant issue. So I think you can see that that will be something that will be there.
It's got to, because the Dow is up 1,400 points in the futures so far.
It's going to be an interesting day. And off the record, it may be a good day to buy DJT stock if you can get it in the first, right in the first thing, because that was considered sort of a proxy for his chances, and now the fact that will obviously be tied to his administration, that would be something favorable. Okay. So that's likely to be extended. What else was related to that? So when this law has changed, I think for the most part it'll stay unscathed. They talked about lowering the tax rate for corporate taxes. I don't think they have the votes for that. I don't think it's that likely. I think it's more likely to stay at 21%. There was talk about raising it back to 28%. That's not going to happen. There's also talk about obviously having additional tax on wealthy individuals. I think that's off the table. I think for the most part that tax law is going to stay intact for the most part. Obviously, I'm not a sage, but that's sort of my thoughts on that issue. So the estate tax exemption should stay similar. The bracket should stay similar. There likely will be some movement regarding the state and local tax deduction. There's been talk on both sides regarding increasing maybe credits for children. That's something that J.D. Vance has been promoting, so I do think that there could be some expansion of tax credits for children and child care, right? So that's something certainly to take a look at. So the whole objective isn't just to get into every aspect of tax, but the point is that when you think about a change in administration, whatever it is or whatever it will be, it's an opportunity, and it's when we look at planning. So the idea is that when we have some clarity on what those laws will be, you try to take advantage of those laws to utilize that to help individuals, right? Certain industries, let's take a look at that, right? So there will be more of an emphasis on energy. There will be less of an emphasis on green energy, certainly. There's also likely to have less regulatory hurdles. I think you'll see, and this would have happened, I think, in both administrations, where there will be an increase in construction in the home building industry. So, but let's talk a little bit about the elephant in the room regarding that, which is interest rates and fiscal policy. So both candidates really didn't seem to have any concern about how much money they were spending. And both independent analysis said that they were going to raise the deficit. So what does that mean for inflation? What does that mean for interest rates? That if Trump does raise a tariff, okay, regardless of what he says or whatever, it's a simple math problem, okay? When you think about what stuff costs, right, and how things are priced, it's very simple, right? It costs X amount of dollars to make it, whatever it costs to ship, taxes, administration costs, right? Then you're going to add in either a cost of capital, rate of return, or your expected profit margin. And that's your price. It's that simple. So if you have a tariff on imported goods, yes, the seller may take a little bit of a hit on their profit margin, but often their profit margins may be 5 or 10% anyway. There's only so much of a hit they can take. Manufacturers and businesses aren't going to sell long-term their products at a consistent loss. They're not, right? So that TV that you bought at Best Buy for $300, maybe it cost $250 to make, and then there was some shipping costs and a profit, and that's where you get your $300. Well, if they add a 20% tariff on that, and now it costs $300 plus your $50 shipping and all that, well, guess what? They can't sell it for $300 because they're losing money. So ultimately, that is going to add to pricing and inflation, regardless of what's said. Okay, from an economic standpoint, that's how these things work. So there is potential for some of these policies to be inflationary. If the immigration policy is actually passed, one of the things that is a catalyst for this is the fact that many of these immigrants, especially ones who may be of opaque status, shall we say, they're working in industries and low-wage jobs, right? So, such as the farming industry, or meatpacking industry, or hospitality, and maids and maintenance. There's also an article that I've read that a substantial number of individuals in the construction industry, in particular, are immigrants. So, if that policy is actually implemented to the full extent, that will create a labor shortage in that, which is going to drive prices up. So there is certainly potential for inflationary pressures in those areas. There's an emphasis on trying to improve housing and create that. So I haven't, this is my thought, but I do think that the housing shortage will continue if they do implement a lot of these strategies regarding immigration, because that is going to create a labor shortage. Additionally, if you have pressure on pricing and interest rates, it's likely that interest rates aren't going to fall as much as expected. Having said that, Trump has indicated a desire to have more influence over the Federal Reserve and monetary policy than is traditionally expected. Therefore,
Our interest rate, and I'm caught up pretty low, even though I had to pay a penalty because of it. Aren't interest rates typically where there have been for years around about? We just past 10 years have seen ridiculously low interest rates. I mean, this is where they probably should be, or around where they've averaged over the last 50 years. And like you two are
5%.
yeah, I would agree that they're closer to where they are now, but they're higher than where they've been historically. But the rates that they got, like after COVID and also after the financial crisis, where you're getting mortgages for like 3% or whatever or less, that is not typical, and you won't see those again. Yes.
I mean, I remember watching a movie where it was in the 80s, and they're saying, "Hey, Dad, you got a 5% mortgage. That's something that will never be available again." You know what I mean? In the 80s, 5%. Was
Yeah.
unheard of, you
There
know?
was if you remember the
It was
movie
like
Wall Street, there's a
14%.
scene where
Yeah, Wall Street. That's
yeah,
exactly
well,
what it
Wall
was.
Street, they were saying he was looking at this apartment, and he goes, "Oh, you know, the real estate agent was going to him and says, oh, you know, I can get you a mortgage 9%. It's like, oh, I'm going to pay cash," and that was considered competitive. My parents, when they bought the house, actually one we have now, they bought it in 1978 before we moved in. They got a mortgage at 9%, and they were ecstatic about that, you know. And that was like, wow, that's amazing. So people kind of forget about that.
30 years ago, I remember I had customers that were paying over 12, 13, 14%, which I thought was holy crap. But seeing 6.5% now, I'm like,
However, when interest rates were in those higher numbers for real estate and even items, things were less expensive.
Yes.
So it's the combination of both, the high price of an item that you're purchasing, whether
And
it's a
the
house
interest
or whatever, and a high interest rate that is creating a bubble. It's
Correct.
creating a huge bubble. And if we lose a lot of tenancy, immigrants, whatever, if we lose a lot of tenancy, we're gonna see a bubble, a real strong bubble in multifamily. Because, there'll be fewer people there.
Yeah, I do think that the Harris administration had more of an incentive, maybe incentive isn't the word, but they had more of a policy directive to increase some of the housing stuff. I don't think that's necessarily a priority of this administration at this point. That may change. They haven't really talked much about this issue, but there is a concern that interest rates are likely to be a little higher. Inflation may be a little bit higher, as well as the fact that housing prices probably remain rather sticky. So, having said that, the idea if you do deport all these people, that may create some more rental demand, which may ease that shortage a little bit. So we'll have to see. So what does that mean? What it really means is that, you know, when you're looking at the environment we're in, whether it's positive or negative, you look at the alternatives. So for example, one of the things that we will do for people, whether it's buying a home or buying a car, maybe a lease versus purchase for a vehicle, or a rent versus buy. So part of financial planning is to sort of look at where we are and what cards we've been dealt with, so to speak, and then try to make the best determination for their individual situation. The healthcare is going to be a significant change, right? In the sense that they may, depending on how Congress goes, they've tried to kill the Affordable Care Act. I don't think at this point that that's likely. I think that it's popular enough. They've even espoused on the campaign trail that they're going to fix it, okay? So, but there'll probably be changes to the healthcare system, right? As far as, you know, the subsidies, what's available, and so on. So these are impacts that we'll have to take a look at. So I don't have a lot of time. Let me kind of tie that together. What it really means is that when we're meeting with people and we're looking at their situation, we're going to basically look at what policies are coming out, what changes are coming out, what situation a person has in their individual situation, looking at industries that may be impacted positively by the change in administration, industries that may be impacted negatively by the change in administration, and then make those adjustments for them, because the idea is that there's always going to be changes. Unfortunately, down the road, regardless of who had ended up in power, we're on an unsustainable path because both parties just want to spend money like it doesn't matter. And therefore, at some point, taxes are going to go up because they're going to have to. So one of the things that you may want to look at is investing in items that will be tax-free in the future, even if it means you're paying more now, because down the road, you're going to be paying a lot more. So that's one of the other things that I would suggest that you look at. Questions, real quick? Yes?
Is this a good climate to be purchasing mutual funds now, the new administration, or stocks?
Well, mutual funds can hold stocks.
I understand.
The issue with stocks is you're tied to the fortunes of a single company, so you need to be more careful as far as what you're picking. There's obviously a greater return because you know, that one company can go up 80%, or maybe the mutual fund might average 10%, which is going to be safer over the long run. So my favorite line is it depends, right? But I think equities in the right industry still are probably the way to go. Any other questions?
All right.